Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, recently the Indian market is such that investors are paying too high a premium for quality right now. Even a good stock can be a bad investment at a very high price. You won't make money from these stocks if you buy them at unreasonable prices. It is what experts call the growth at stupid prices, or GASP. Here in this video, we'll be talking about 7 fundamentally sound high quality growth stocks available at very reasonable valuations. These could be candidates for accumulation on all corrections. Please watch this video to know more about these stocks. Now the first stock on the list is Kalpataru Power Transmission, which is available at Rs 330.05 and the face value for it is 2. The target price here has been set at 506.70. The symbol for it is KALPATPOWR. Now Kalpataru Power Transmission Limited is an engineering, procurement and construction contracting company. The company manufactures metal frameworks or skeletons for constructions and parts such as towers, masts, trusses and bridges. Its segments include transmission and distribution, infrastructure, EPC and others. Now due to strong order inflow and its bulging order book, Kalpataru Power's revenue is expected to grow by 16.2% CAGR between 2017-18 and 2019-20. Part of the real estate developer Kalpataru Group, this company is into design, testing, fabrication, erection and construction of transmission lines, oil and gas infrastructure and railway projects on a turnkey basis. In addition to improving prospects from the power transmission business, there is a strong order inflow from railways, road BOT projects and pipeline businesses. Its order book increased by 41% year-on-year in the first quarter of 2018-19, giving it clear revenue visibility for coming years. There is also significant improvement in the performance of its subsidiaries like JMC Projects. More importantly, Shubham Logistics, which has reported a loss of Rs 10.4 crores during first quarter of 2017-18, has reported a modest profit of Rs 60 lakhs during Q1 of 2018-19. Kalpataru Power has also established presence in more than 50 countries and should therefore benefit from the recent depreciation in the rupee. Now the second company on the list is CSE International Limited, which is available at 305.10 and the face value for it is 2. The target price here has been set at 411.45. The symbol for it is KEC. Now KEC International Limited is engaged in the construction of utility projects. Its geographical segments include India and outside India. Its power transmission and distribution businesses include providing end-to-end solutions in power transmission and distribution. Now KEC International's earnings growth is expected to continue for the next 2 to 3 years due to higher margins and its fast-growing order book, as per Rupesh Sankhe, who is the power and capital goods analyst at Reliance Securities. The flagship company of the RPG Group, KEC International, has a presence in 100 countries across Africa, Americas, Central Asia, Middle East, South Asia and Southeast Asia. In addition to the 28% underperformance against the Sensex in the past 1 year, its investment worthiness has also increased due to improving fundamentals. First, the government's Uday scheme has helped state electricity boards and they have in turn increased their capital expenditure, leading to bigger orders for players like KEC. KEC's order book has hit an all-time high of Rs 18,200, which is 1.8 times that of the total revenue for 2017-18. Since KEC is favorably placed in being the lowest bidder in other orders worth 3,180 crores, its order book is expected to bulge further in the coming quarters. Second, concentrating only on high margin orders has led to significant margin expansion during the past 4 years. The stock is expected to benefit substantially over the next few years. The third company on the list is CSE Limited, which is available at 944.70 and the face value for it is 10. The target price here has been set at 1167.55. The symbol for it is CESC. Now CESC Limited is an integrated electrical utility and holding company. The company is engaged in the generation and distribution of electricity across approximately 570 square kilometers of licensed area in Kolkata and Howrah, West Bengal. The pending demerger could enhance value and remains a potential trigger for the CESC stock. While CESC's core business, which is power generation and distribution, is going on smoothly, CESC has been forced to split its core business into separate power generation and distribution companies due to regulatory issues. After the split, the management wants to focus more on the distribution business with low capex. This strategy should boost its profitability in the coming years. Since the entity is facing conglomerate discount, When the total value of a firm is less than the sum of its parts, the management wants to split the company further. Most experts are bullish on the demerger plans of this Sanjeev Goenka group company. Some of its subsidiaries, such as First Source Solutions and Spencer's, are also doing well. The prospects for Spencer's have improved after its decision to close down unviable stores. It has already broken even at the EBITDA level and is expected to break even at PAT level in the next 12 to 18 months. Now the next company on the list is Indiabulls Housing Finance Limited, which is available at Rs 1062.15 and the face value for it is 2. The target price here has been set at 1573.30. The symbol for it is IBULHSGFIN. Now Indiabulls Housing Finance Limited is a housing finance company. Now this company has underperformed the Sensex by about 25% in the past 1 year. However, there is no change in its fundamentals. The company has been reporting around 30% earnings CAGR and a similar rate is expected in the coming year as well. Since there was no negative surprise during the shift to Indian Accounting Standards or Ind AS, experts are hopeful that Indiabulls Housing will sustain its earning momentum and improvements in key ratios like return on equity in the near future. The housing loan demand continues to soar due to the government's push of housing for all by 2022. Now Indiabulls Housing is also protecting its margin by regular hikes in loan rates to offset the increased funding costs. More importantly, there is no let-up in asset quality due to its strict risk management systems. Analysts feel this will bring down its credit costs. Now the next company on the list is Suprajit Engineering Limited, which is available at Rs 240.30 and the face value for it is 1. The target price here has been set at 297.20. The symbol for it is SUPRAJIT. Now Suprajit Engineering Limited is an India-based company engaged in offering automotive cables, speedometers and automotive components and parts. The company is engaged in the business of manufacturing of auto components consisting mainly control cables, speedo cables and other components for automobiles. Now a recent research report by Axis Capital says that the next leg of growth for this company will be led by gains in global non-auto cables market, domestic four-wheeler space and market share gains in aftermarket. Suprajit Engineering, India's largest and among the world's top 5 automotive cables manufacturer, has consistently outperformed the industry on revenue and EBITDA growth over the past decade. Its valuation has become reasonable only in the past 1 year. Since its growth is still continuing, the correction gives investors a good entry point. The management is taking steps to maintain its high growth rates in the coming years, and experts believe that Suprajit Engineering will be able to deliver. With new OEM orders coming from European auto majors and a bigger push planned in North America, the export segment is also doing well. Now the next company on the list is UPL Limited, which is available at 665.80 and the face value for it is 2. The target price here has been set at 814.60. The symbol for it is UPL. Now UPL Limited provides crop protection solutions. The company is engaged in the business of agrochemicals, industrial chemicals, chemical intermediates and specialty chemicals. The company's segments include agro activity and non-agro activity. Now UPL is one of the few global agri-input companies with a presence across the agri value chain. With around 20% historical CAGR and expected future net profit growth, this mid-cap company is also a stable growth player. Its strong performance continued during the first quarter of 2018-19. Its first quarter revenue from Africa more than doubled and it did well in Latin America despite currency devaluation in countries. The recent acquisition of US-based Aristas Life Sciences for an astounding $4.2 billion is seen as a positive development by experts who say this deal is value accretive for UPL. Now Investec Capital Services says that the acquisition of Arista is likely to be value accretive if UPL realizes 30% of targeted synergy. There is also no worry about details because Arista is part of a listed company and hence analysts continue to be very positive about the future prospects of this company. Now the last stock on the list is Janna Auto Industries Limited, which is available at Rs 79.65 and the face value for it is 1. The target price is 112.60. The symbol for it is JAMNAAUTO. Now Janna Auto Industries Limited is engaged in providing automotive suspension solutions for commercial vehicles. The company is engaged in the business of manufacturing and selling of parabolic and tapered leaf springs. Now, as is evident from the 1-year chart, the company had been on a beautiful uptrend for a major part of the year, but since then has largely been consolidating and has been an underperformer. Now, HDFC Securities in a research report says that Janna Auto is a key beneficiary of the shift in commercial vehicle demand towards high tonnage vehicles, leading to higher margins and realizations. The market has already started rewarding Janna Auto for its high historical and future growth rates. This explains why the stock has outperformed the Sensex by almost 38% in the past 1 year. This is despite a 33% correction in its price during the past 6 months. In addition to the recent correction in the stock price, experts are bullish on this counter for its improving fundamentals. Firstly, it has benefited from the structural changes happening in the commercial vehicle space. Jamna Auto is a key beneficiary of the shift in commercial vehicle demand towards high tonnage vehicles, says Deepak Jasani, who is the head of research at HDFC Securities. Secondly, the recent correction was triggered by the government's decision to allow higher axle load for existing vehicles. Though this may reduce the demand for medium and heavy commercial vehicles, its impact will be in the short term and could affect Jamna Auto's revenues only for the next 1 or 2 quarters. Third, the company is also planning to de-risk its business by expanding into aftermarkets and introducing new product segments like lift axles, air suspension. Its focus is on the replacement exports market, which is growing by around 15% in volume terms. However, investors should note that commercial vehicles is a cyclical business and therefore the entry or exit into this particular stock has to be timed very well. Now friends, please don't consider this to be a recommendation on our part. This is not our own research. We have provided the link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.